Good evening, everyone. Good evening. Today is March 9th, Thursday, 2023. And what a day it was, guys. For the financials in particular, that we're going to get into in just a second, probably one of the worst days looking back historically since 2008. Um, really nothing to balk at, and definitely something to note. Now, as always, we're going to kick this off with a SPY chart, the S&P 500, the daily chart, and really, again, what we've been saying is bearish below, bullish above. Now, looking at the SPY in a little closer here, because I want to show you something. This is a really nasty sell day. And this was just the S&P 500. We're going to get into some other markets as well. And it was a nasty sell day on volume. The daily candle closed below all of the moving averages. So remember when this came down first, tested the thing, all the important stuff, and bounced off. And we're like, okay, well, if it's going to consolidate now and give it the old college try, well, that's what it's going to do. That is not what it did. So now it's closing below all of those moving averages. Now, while it's above this trend line, fair enough. However, you have to be on guard if you are long or you're trying to be long. I certainly am not, but you have to be on guard because this little measured move here is really what I'm looking for, and I really think that this is the probable scenario, and it's not perfect, mind you, but the level that this can really and should get to for the next pit stop, and there'll be patterns and bounces along the way, but it's really around 360, 350, which is a major fib level as well as a pivot level. So, I again would be watching out for closing candles, any more candles below this trend line. If it gives you a retrace and it doesn't break out too much above this, right? Because we all know that, this was a very scary day for the financials, which we'll get to in a second. But, it certainly can pop back up tomorrow, right? Start closing candles and then break out and do one of these and fake everyone out. Because, mind you, what is next week? Next week is options expiration, I believe. I have to double check my notes, but I'm pretty sure it's options expiration. And what happens during options expiration? Well, it's a bunch of institutional game playing. So are the institutions just stumping here above the bullish trend line, going to fake everyone out, or is it real? Now, what's telling me it's real is the financials, and let's get over to that right now. So the financials, and this is the Spider Financial Sector ETF. This is really, really bad. um, that volume and that candle, and then we had a day trade on a financial today that ended up working out very, very well. But you had to really snipe this thing because this is a crash. And looking into it, it's pretty wild looking back at it, and just how quick we got out of this day trade because everything, including Schwab, which I did call out and then warned everyone, watch out for the pattern that it's going to create because longer into the afternoon, we don't want that type of action. We want the early morning action, which was the PACW trade before the crash really started to happen. So, nasty crash here, guys. Let's go back to the XLF. What do we talk about with gap downs? And this was, right, a strong gap down. Now, this structure, what you could have done, right, is look for, okay, it broke this structure. Let me get out my pen. When you start to look at these markets very simply and what's really happening, nothing moves up in a straight line. And, once it broke this structure, you could have waited for that retrace of this breakdown candle high, maybe buy some put options, stop out below up here or above up there on, let's say, a daily or a weekly close. Well, you would have made out really well. Excuse my poor arrow, but you would have made out really well. You probably would have booked some profits here, let the second half ride, and take some profits at the 200 period moving average. These are all things that you start to understand, once you see how markets really work and how really all charts act and react the same way. I don't care whether it's commodities, crypto, equities, it's really all the same thing. I just care about how safe my money is because when I'm swing trading, I'm trading with a high percentage of my net worth. So in any event, I digress. Nasty day in the financials. What are we really looking for as the next destination? Well, if we get some type of retrace on this, certainly be looking for shorts from a swing trade perspective. But look how cool this is. What did it really do? It came down to run a test of the 50 fib retrace, right? And where is it going next? Well, it's going to the 618 and probably to fill this little gap right here at about 332.20. Okay, so if we get any type of retrace from this breakdown candle, and I'm not really certain that we will, but if we get any type of retrace, right, and you can even give it some breathing room if they don't close candles above that breakdown candle high, I mean, we're very likely going down here. Okay. So, again, just really common basic market behavior from a swing trading perspective. This, however, is a telltale sign of something else going on. The banks, I was talking to a few people, worst day since probably 2008 for a lot of these banks. SVB Financial Group, this thing might be cooked. And I mean, this thing might, unless someone comes in and saves it, I mean, this thing might actually be going bankrupt now. So this is the type of thing that you guys are looking at when you're looking at. It's not funny, but you're looking at some severe recessionary signals. So not just a correction, a market correction where 2020 happened. It was a flash crash, and then everyone becomes millionaires by buying the dip. This type of stuff, when the financials start to fail, and that's really where things actually matter, and things can get really nasty, really quick, and liquidity can really dry up very quickly. So definitely something to keep on the table, guys. The market leading indicators were all really bad as well. So let's see, IWM was down 2.78%, while the S&P SPY was down 1.8%. So again, really, really nasty. 2% on the transports. Again, from a structural standpoint, it is more bullish. However, nothing bullish to be about other than the downsloping trend line on these, which can get taken out very quickly in short order. So, I'm not in any positions. I'm just calling balls and strikes at the time being. Probably looking for shorts from a swing perspective. Okay, now let's get into the day trades because that's why we are here. Calling out day trades. I think if you don't count the break evens, which were technically wins, or actually they were wins, and then we let the second half ride, or I let the second half ride, and then when it came back down, I just stopped out even. So technically these two would have been wins if I just took the scalps. But we are at, I believe, like a 90% win rate now on these, just staying patient with the setups, only taking the best setups, and that's it. So we're about a 90% win rate after today. We got by the skin of our teeth on what was it? PACW. So Thursday, March 9th. Happy Thursday. Jerome Powell's done jawboning. And wow, what a day it turned out to be after he was done doing that. I got some SPY numbers and lazy day trade setups coming soon. That's at 7:30 a.m. I got some numbers on the SPY and they acted pretty damn well. So what they were doing around 390, I think it was 398.50, where they were playing games with this number. And I said above that number, they're going to go to 400 and beyond for starters. Now, aggressive traders can use that information to do what they like. Me personally, I'm just waiting for the best setups and not getting whipped around. But certainly, some traders can do what they would like with that information. Okay, now into the lazy day trades, PACW. So let's get into this one right now, and then we'll go back to the SPY and see what SPY did. So PACW, again, I mean, down 25% on the day, not something you see all the time. However, this came in and gave you the trade. This is a minute chart, 1, 2, 3, and gave you the trade within seconds. And we were only looking for 25 cents on this thing. So your average was 23.53 approximately, and you're out already by the time it gets here. And I showed everyone, I think I had made a little over 1,300 in 30 seconds on this trade. That's what we're looking for. This was 9:33 a.m. Goodbye. If you don't want to do anything the rest of the day, that's what this is about. Get the trade setups, take the best ones, and leave. So that's what I pretty much told everyone. That's the purpose of this. And if we go back to the channel, you could see how quickly that happened. Now, going back to the SPY, what I had said was, are they carving out a bottom short term? Now, what I mean by short term, it could be the day, or it could be for the first hour or two, or perhaps for another 2 days. Now, short term, 399.50, if the bulls can recapture that while staying above 398.50, they're going to go higher. So again, they went up, up, up. Let's go back to the SPY chart here on the, I got the 10-minute. There you go, the 10-minute. Now, right of today is where they opened. They opened above 399.50 because they knew that was the spot that they had to get to, in order to recapture the higher stuff. I had a short, an aggressive short on the board. It was 401.70. It did not get there. I didn't want it. I actually wanted more closer to 403.95, closer to this breakdown candle high. But in any event, nothing to do with the SPY. I had that first trade and I said, okay, let's just take it easy here and see what else we got. All right. So again, above 398.50, they're going for more stuff. You could have rode that up, and 401.70, they just came just short of the short, which would have been a whopper of a short if you held the second position. Okay, going back into the channel here, we had that PACW trade, great rip on it. We're out 934. That's what you're in this for. Go do something else. Go to the pool. Now, I want to show you one trade alert at 10:13 a.m. because I don't know if anyone took this later in the day. I hope no one did. But this was Schwab, and I said 70 to 69.75, 75 cents on the higher end of the stop and target. Okay. Now, what happened? I had called this out at 10:13 a.m. Okay. And at 10:13 a.m., here it is coming in hot, right? Let's zoom in a little bit more here. Okay. Let's get my pen out. It's coming in, it's coming in, it's coming in, it's coming in, it's coming in. And if it did this, right? This would have been 1, 2, 3, 4, 5, maybe 6 candles. We like a 6 count candle for those that know candle counts. 6 count candle right into the level would have gave you a scalp. But guess what it did? Okay. It came down, all right, and it chopped above what was our target? 75 cents. It chopped above 75 cents above the level. And when it does that, that means it's building energy to go lower. Okay. And what time was this at? 12:30? And it comes into the level at 1:30 p.m. That's not what we're here for. We're here for the morning trades. And if, let's say, this thing was super far away, okay, and let's say it's 1 p.m., but this thing's way up here, it's way up here, it's chopping, 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 and then it comes down into 1 p.m. like that, I will take that trade. Absolutely. But everything has to come into in the manner in which I like it. Otherwise, it's going lower. Okay, so that's just a little lesson for Schwab, and I hope everyone made it out okay on that one. I think everyone would have. Let's see here. Yeah, I think you close the 15-minute candle probably. Yeah, it came in. You closed the 15-minute candle at 69, so you were out at 50 cents anyway. So that's a normal stop. But in any event, just want to show you didn't want that. You didn't want that. Now, what did it end up doing? Let's just do this. This will be fun. Right here was a tail candle, and it just did not respect that hourly tail candle. But let's see where it stopped. Okay. Wow. Look at that. Big pivot, big pivot, big pivot, breakout area, big pivot, and then what else? Look at that. How cool was that? A gap, a huge hourly gap. It stopped on a dime and gave you a great trade. Now, I'm not saying that this was a trade setup, late in the day, but these are the types of things that we look for when we're looking for these morning trades. So just cool to see guys. As always, let me know if you have any questions. Looking forward to continuing to do this, and be safe out there. Actually, one more thing I wanted to go over: Bitcoin. Last but not least, the all important Bitcoin. What is it doing? It nuked, broke down below this level. It nuked, and now is coming to fill this gap. That is not, in my opinion, a long opportunity, but what is it doing, right? If you had a short bias, right, and you were short up here, I know a lot of people were waiting for this area to get short, but if you had a short bias, this is a target. That's a target area. The same thing, right, if you were a bull and you said, all right, I don't really believe that, it's going to nuke. Well, what's your target as a bull? Here's your target as a bull, right? So you could have played both sides. If you were a bull, you were wrong. I'm sorry. But in any event, now it's coming to do this. If markets start to nuke, guys, Bitcoin is going down to around 12,000, 12 to 11,000. And that's just the next pit stop. Big area around 12,000 to 11,000. There's a gap around 11,000 too. I think so. Yeah. Let's check this out. Now the CME futures gaps, I like them. I know a lot of people don't, but yeah, I mean, there's a gap around 10,000 as well. So I would not be surprised to see it down there, guys, in a market event, a liquidity event, especially with the financials that bad. All right, guys, we went over big time today, but a lot of important stuff to go over. Thank you again for listening. Please let me know if you have any questions, and we'll see you tomorrow on the charts. Take care.